excited to treasure hunt that fundamentally strong company. So let us start by understanding the financials of the company. Now, financials, we know there are three important tools. The first one is the P&L statement, that is profit and loss statement of the company. So this is very important to understand the statement, how it is prepared by the company. This is the basic which I'm going to teach you, and then we will learn about the ratios. So let me give you example. Let us assume there is a company which is making some product. Say it is making soap. It is manufacturing soap, and that company is supplying soap throughout India. They have a Indian market. Okay. Now for the year, say 2022, okay, they publish their profit and loss statement, and this is how it is looking. So for the year 2022, that is the entire 1 year, their sales is also called as revenue. Okay, sales or revenue income is 100. Okay, so I'm taking very simple number over here so that it will make you easily understand. Okay, so for the entire year, they sold goods worth ₹100. Okay, now this sales or revenue is also called as top line growth. Okay, this is top line growth. Now, in this 100 rupees, there are two things. Okay, the first is the cost for making that soap, correct? When a company is making any product or they are selling any services, there is a cost. And second is, after taking out all the cost, whatever remains with the company is the profit. Okay, if it is positive, then of course it's a profit. Now, let us assume, so we need to find out from this 100 rupees, how much was the company's cost and how much company has made profit. So let us assume the company's cost for making that soap is 60 rupees. Okay, now this cost is called as operating expenses. Operating expenses meaning these are the direct cost which is used for making soap. Like for example, electricity, power, wages. Okay, when the company is manufacturing any product, they hire employees and workers to make the soap. So their wages, their salaries. Okay, the raw material cost, most important thing, right? So whenever any product is to be prepared, you need some material to make that. Okay, so for making soap, they will need, I think there is one ingredient which is called as lye. They will need some, what do you say, fragrances, okay, scents, color, some chemicals, so many things are there which they will need to make that soap. Okay, so that is the raw material, that is called as raw material. Transportation, okay. So these are all the direct expenses which are required to pay to, which are required to make the soap. And these are called as operating expenses or operating cost. Now, after taking out this cost, obviously what remains with the company is 40 rupees. Now, this 40 rupees is the profit. But this profit is called as operating profit, which means this is not the final profit of the company. After taking out the operating expenses, whatever remains is the operating profit. Now, from this operating profit, there are some more expenses that the company has to incur. They have to pay to some more, what do you say, for some more items. Okay. Now, this operating profit is important because this will help us to understand how much is the expenses for making the soap. Okay, and after making that expenses, how much remains with the company. So this operating profit is, we will always calculate in terms of percentage. Okay, comparing to the sales what company has made. So we will always focus on operating profit margin, OPM, which is calculated in percentage. So when the company has sold goods worth ₹100 and they have made a profit of 40% on it, 40 rupees on it, the operating, the percentage is 40%. So sales, when you compare sales with the operating profit, you get the percentage. Now, what are the expenses that the company still has to incur? They have to pay from this operating profit. So let us understand that. Now, before calculating those expenses, there is one more thing which gets added to the operating profit, which is other income. So whenever company is making additional income or additional profits, okay, which is not related to the direct or to the core business of the company, that income will come under the category called as other income, and that income will get added in the operating profit. Okay, sometimes what they do, those excess funds, they will keep it in the bank. Now, when you keep your money in the bank, what does the bank do? They give you interest, right? You earn interest on that amount. So company also earns interest. Sometimes company also invest in mutual funds. Okay, they invest in land, building. They may give it on rental. So whatever rental they are earning, then they give it as a loan to someone else, and on that loan they will earn interest. So all this, whatever additional income they are making, which is apart from their core business, will get added into the operating profit as other income. So we need not focus more on other income. If the company is earning, it is good, but the main core business of the company, that revenue has to be growing. Okay, so after adding other income, the expenses that the company has to show is depreciation. Now, what do you mean by depreciation? See, depreciation, now when the company has started manufacturing soap, obviously they will need assets. Okay, assets, what are assets? So assets is like land. They will need land, right? They will need building. Important is they will need machinery, right? Plant and machinery. So machinery which will be that machines will be used to make those soaps, which they can sell in the market. So machinery, computers, if they have their own transportation, if they have their trucks, their tempos, etc., etc. So all these things will come under the assets category. Now these assets the company is using, and when the company is using these assets, there is a wear and tear. Okay, when machinery is used, there is a wear and tear on the machinery, and so the value diminishes. It goes down, and that is the depreciation that we call. Okay, if I want to give you a simple example using a day-to-day life for the normal person, the common man. See, when we buy a car, right, we use that car, and after say a decade or 20 years, 10 years, you want to sell that car. So when you go and sell the car, the amount at which you had bought, will you get the appreciated amount on it? No. So when you sell, when that calculation is done, you calculate using depreciation because the value goes down. Value जो है वो नीचे घटती है, right? So same thing, even the assets that the company is having, they have to show depreciation on it. Okay. Now, how that is calculated, what is the rule and all, let us not get into that. Just understand that P&L statement, the company shows depreciation. Okay. So let us assume for the year 2022, the depreciation on the assets is 20 rupees. Okay. Now, this is paid, this is minus from operating profit. The next thing that the company has to pay from the operating profit is the interest. Now, suppose this company, which is manufacturing soap, they have taken loan or debt from the bank or from any other lenders, okay, when they want to start their business. On that loan amount, they have to pay interest, correct? So that interest or interest expense is paid from operating profit. So let us assume the company has paid 10 rupees as the interest. Now, after calculations, 40, 10, minus 20, minus 10, what remains with the company is 20. So now the company is having 20 rupees. Is this the final profit of the company? No. The company still has to pay tax. Okay. So after paying tax, whatever remains will be the final profit of the company. So after calculating depreciation and interest from operating profit, what remains is the profit before tax. It is also called as PBT. Okay. See, the salaried people, we have to pay tax to the government, right? We pay income tax. Similarly, the companies, the corporates, the businesses, when they are doing business, when they are earning profits, they have to pay corporate tax to the government. Okay. So after paying this tax, let us assume the tax is 8 rupees. I'm just taking random figures to make it understand easily. What remains with the company is 12 rupees. Okay. Now this is the final profit of the company. From this, they don't have to pay anything. This profit is called as net profit. And we need to again calculate percentage wise to see how much percent they have earned on their sales or on their revenue. So that we call it as net profit margin, NPM. So on 100 rupees sales, the company has made 12 rupees profit, which means they have earned 12% profit. Okay. Now, when the company is making profit, when they are having this money, what the company do with this? This is the excess amount that they are having, right? So what are they going to do with this? So they can either put that money back into the business, right? Because company keep needing a lot of funds for their day-to-day operations and for expansion. Okay. So either the company can put back money into the business, or they can keep it surplus, and they can also distribute this profit to the shareholders, to us, when we invest our money in the company. Okay, so which is distributed to the shareholders in the form of either dividend, right? There are various different ways through which they distribute this profit to the shareholders. One of them is the dividend. Okay. They also do buyback shares. They will also buy. They can also buy back the shares. They can split the shares. There are many different ways. Now, from this profit, as I mentioned, they can distribute it to the shareholders. So let us assume from 12 rupees, 50%, that is 6 rupees, they distribute to the shareholders. And the remaining 6 rupees, they keep it with themselves. The company retains those profits. Now, when the company is retaining those profits with them, it is very important to understand what they are doing with that money. Okay, whether they are reinvesting in the business, whether they are, and when they are doing that, it is good because they are creating value for the shareholders, or whether they are going to use it for expansion. Okay, now as I mentioned, say this company, okay, that this company is selling its products only in the Indian market. Now tomorrow they want to grow. They did a lot of research. They came up with a new product, and that product, what they have made, is suitable, say, for the US market, okay, for the Americans. suitable on their skin type or on the climate. Okay, now this product they have research, now they want to manufacture and they want to start exporting to US and they want to grow. Okay, that is expansion. That is what they want to do. Now, when they want to expand, when they want to grow, obviously they will need additional funds. And from where they will get these funds? Okay, they should get those funds from their existing business. Whatever surplus cash they are having, they should go and invest in that. Okay. Otherwise, they can even go and take loan from the banks. But if they can grow, if they're retaining their profits and on the basis of that they are growing, that is a good thing for shareholders. Okay. Now, sometimes there are cases where company retains the profit. They even do not distribute to the shareholders and they are not growing. So what they're doing with the money? It is possible that the management, the promoters, the founders might be misusing those funds. They might be using those funds for their self-interest, for their self-growth. They might be the promoters or the founders, they might be taking out the funds from the company in different ways. So this we will learn in the management analysis. What are the ways that they can take out the money from the company? Now, this money, this profit is shareholders' profit, so they should not misuse it. Okay, so it is important to understand whenever the company is retaining the profits, what are they doing with those money? So this is how the P&L statement is prepared, and these the important terms that we always need to focus on is the top line growth of the company and the bottom line growth. Now, what is bottom line growth? Bottom line growth is the net profit. Okay. The sales revenue come on the top of the P&L statement. So top line growth, and net profit comes at the bottom of the P&L statement. Sorry. So bottom line growth. Sales revenue comes on the top of the P&L statement. So top line growth. And net profit comes at the bottom of the P&L statement. So bottom line growth. So you need to focus how the company's sales is growing. Okay. Their net profit, if their net profit has come down, what is the reason? Then you can focus on the operating profit. If the operating profit is reduced, if that is reduced, then the net profit will reduce. Okay. And where their expenses are more. Okay. And what they do with the surplus, how much they are retaining with themselves, and what are they doing with it. So these are the important things that you need to focus on. Okay. Now, what example I had given, I had mentioned as 100 rupees, but company doesn't work on so small figures. So these figures are in crores. Okay. So the sales revenue that I have mentioned 100, it's not 100, it is in crores. Okay. So 100 crores. Okay. Now, when you want to check for any company, and you will go and check. Now here the company has made a profit, which is very good, which is 12 rupees. Again, that is very good. Okay. But we are not going to take our decision of investing our money just on the basis of 1 year. Okay. 1 year the company could have done very good, but what about the next year? How did they perform? Did they grow from here, or was it stable, same, or has it come down? Next year, possible the profit had come down all the way from 12 rupees. It could have come down to 7 rupees, 8 rupees, right? So you need to analyze even for the second year. Now, let me tell you one more thing over here. See, whenever any new business comes, okay, whenever any new company starts their business, initially they will not perform well, okay, because it's the initial, and any business take times. It takes time, say for 5 years, more than 5 years, to settle down and to start making profits. Okay, so when the company is new, you should not just focus on 1 year. Okay, and even if it is existence, say from the more than 5 years, you will still not focus only on 1 year P&L statement. You need to check what happened in the next year, the next year, okay, in the 4th year, 5th year, because it is possible in the 2nd year, the sales of the company could have come down. Okay, in the 2nd year, the sales came down only to 80 rupees. Okay, maybe because of low demand or because of competition, because of new company coming and getting new soap, okay, or people preferences change from soap, they started using shower gel. Okay, there are so many reasons. So the sales could have come down and the profit could have also come down. See, it came down to 10 rupees. Or there is also possibility that in the 3rd year, as I mentioned, this company wanted to grow. They wanted to export their product to US company. So they had invested their money. Okay. And now from the 3rd, 4th or say 5th year, the company sales started shooting up. So their sales growth went to 125. Okay. And then it went to 130, 150. Right. So this is how you need to analyze what happened and how the company is growing or whether it is going down. So whenever you want to invest your money in a company for long term, you should not focus only on 1 year, 2 year, 3 years or 5 years. You should analyze the data for more than 7 years. 7 to 10 years is what you should look for. Okay. So I just mentioned over here, you need to look for at least 7 to 10 years. You need to analyze the financials of the company. Because see, as I mentioned, there are ups and downs. Okay. Like from 100 rupees, it came down and then it went up. Okay. But in the 3rd year, there is also possibility that the sales figure is going down continuously. From 80, it came down to 70. From 70, then it came down to 65. This is also possible. And then suddenly it went up again to 100. So this ups and downs is always there. Okay. So you should not just look for 1 year. And you should not even look for individual figures. We will calculate and we will take out again a percentage for 10 years. What is their sales growth? At what rate they are growing? Okay, so that we will learn in the next video. Okay, so I hope you're clear with the understanding of P&L statement, how the statement is made. And once the statement you have understood, whenever you want to invest, you will focus on 10 years data. Okay.